Here we go again. Same exact day as yesterday. We got this dive off the open. Well, this one had a little delay. Dive off the open and then a slow rally back. And this actually closed out yesterday at about 4,500, just above. And it's probably going to do the same thing today. And it's frustrating because, well, it's actually, if I had the time to watch this the entire day, I could probably do some decent swing trades out of it. But I'm just not, I just don't have that time to, swing trade. Look at this. Drop, melt back up, drop, melt back up, drop, melt back up, but it's in a downward trend. So this is for the 5 minutes. So this is a few weeks. Let's do the 30 minutes. Yeah, downtrend right there. I don't know where this is going to end up, but we have to close above this 4,500 sort of to break this downtrend, because you have lower highs and lower lows here, down here, and then here, down here. So if we could break this 4,500, maybe we'll come out of it, but I don't expect that to happen until next week. So again, I'm looking for more buys. I have a little bit of cash left over. I'm actually carrying a lot of stock at the moment, but I want to look at a couple names that I don't typically trade. Realty Income Corp. It's a little high in terms of the price that I normally trade. I like to do under $50 to get it less than 4% of my portfolio. But this is a pretty solid name. It's got a very good dividend, and it's at a decent price. So it's at about $60. 59.65 here. This is what I'm going to do, since this is a solid name. We're after that ex-dividend date, so we missed it by about a week and a half. I'm just going to put it in the money put at 60. Collect that $70 in premium. And then if I get assigned 60, then I will just keep it until the next ex-dividend date and collect that dividend. But it is a pretty solid name. I do have a decent amount of cash, and so I'm going to sell this in the money put. All right, got that filled. And then another one that I typically don't trade is ET, Energy Transfers. I typically trade EPD instead. They are pretty much the same, but EPD is less volatile. And if you look here, see, it's trading at about $13. But if you look at the 13 strike, it's only paying 0.6 here, or so $6 for this call, but it's trading 27 for a put. Now, why is that? Well, here's why. It's because the ex-dividend date is on the settlement date. So 11 August here, which means these guys don't get the dividend. So if I were to put in this put and it got assigned, I would not get the dividend, which is, I believe, is like a 9% dividend. But if I did the call here, I would get the dividend, which why nobody wants the call. So here's the predicament. Do I buy the stock at 13 and then this says it's going to drop precipitously because of that, and just wade through and wait until it bounces back to 13? Or do I collect premium and not care about the dividend? So the dividend is 10% if I bought 100. So the dividend is about $13. So I'm going to go ahead and sell the put at 27, because that's double the share price. And then if it doesn't get filled, then I got $27 in the bank. If it does get filled, I just have to sell a call at 13 just after the next ex-dividend day. So I'm going to go ahead and collect this premium, because that's my strategy. And this is typically not a dividend portfolio. Step one is sell the put. Step 2 is sell the call. And then step 3 is collect the dividend. So I don't want to bank on the dividend. I want to do step 1 of the wheel on it. All right. So those are my trades. Very similar to yesterday. Looking for the dividends because those will pay you even in a down market. And because there may be a pullback coming based on that downward trend in the SPX. And I'm going to Vegas tomorrow, so I don't know if I'm going to upload a video, but definitely Friday will not be uploading a video. I'll be gambling my winnings or gambling my premium money away.